Hello, I'm Doug Musio. This is another City Talk conversation on issues in the 2008 presidential election. Stock markets in the tank. No more Lehman, no more Merrill. Deep recession, lost jobs, widening budget deficits, unemployment up, pensions plummeting. A financial apocalypse? Here to talk about the national and international financial crisis, particularly on its impact on New York City, is City Comptroller William Thompson. Joining me also is Sarah Bartlett, the director of the Urban and Business Journalism program at the CUNY Journalism School. Professor Bartlett has worked at the New York Times, Fortune magazine, and Business Week, where she became assistant managing editor. Professor Bartlett is the author of hundreds of articles and has written and co-authored 2 books. Professor Bartlett was a host of CUNY TV show USA Inc. Welcome, Bill. Welcome, Sarah.
Thanks.
First questions to you. I'm really depressed. I'm reading the financial pages. I'm reading the foreign press. Is this really the end of times? You know, briefly, just talk about what's going on.
I don't think it's the apocalypse. I think it is incredibly difficult times. I think these are times that we probably have not seen before. At the same point, these are times that, you know, more irrational times also than you've ever seen before. I think we'll start to see some slowing, some stability in the near future. Eventually, the bailout package and other things are going to have some impact in slowing down the decline that we've been seeing.
Just a quick follow-up. How bad is this for New York and New Yorkers now and what it might be? We'll talk further about that, but generally.
This is bad for New York. We're very dependent on Wall Street. If you look, I mean, no matter what number you use, whether it's look at the financial sector and say it's 5% of the jobs but 20% of the revenue, or the financial sector along with the insurance sector, 9% of the jobs, a third of the revenue. It's bad. If you look at this decline, the impact it will have just on jobs in New York City and then on our budget eventually, it's going to be tough.
Okay, we'll talk about that in a little bit more detail. Is there a silver lining here? Are there opportunities in this gloom?
Well, I do think that there's a chance now to do what we should have been doing over the last 8 years, which is diversifying the base of our economy. We've been so dependent, like a drug, on the Wall Street bonuses and the tax revenue that comes from those, that we've really neglected opportunities to make this a place where middle-class people can live and work and do business. So I hope that we use this as a chance to invest in new emerging industries, really cement the strong cultural and creative sector that we have here, make it a more inviting place for technology companies to do business. There's a lot of other things we can be doing and we should be doing.
So you're talking about a general failure of policy in that the structural problems that existed 8 years ago or a decade ago are the problems that exist now, but the impacts are worse.
But only worse because the amount of money that was generated on Wall Street was so vast that it really, it was like a drug, and this is a chance to rethink things.
That's part of it, but also, I mean, when you talk about how dependent, it wasn't just, I mean, this time in the change is, you know, you're seeing firms that are gone. You're seeing permanent job loss. And, you know, Wall Street has always gone through its cycles, and New York City has gone through those cycles with Wall Street. This is permanent job loss that we're seeing this time. So some of these firms like Lehman and Bear and others that are disappearing, we're not going to see those jobs come back in the future.
And the problem is those jobs were paying more than the jobs in other sectors. So it's going
to be
therefore
generating more taxes.
Right. It's going to be very, very difficult to find another industry that can ever be as successful as Wall Street was. But if we don't start trying now, we're really sunk.
What other sectors might have, if not as large a multiplier effect as Wall Street jobs? I mean, the claim is that 2 jobs in the city and 1 in the suburbs. What are the other sectors that might present us with the opportunity to grow New York in some way?
I don't think you're ever going to see another industry that's going to be quite as rich as Wall Street was. I think that's part of the problem, is that it was excessive, and we actually don't want that
Hence
or
the
need
addiction.
that. Yeah, we need something that's more stable. Higher education, healthcare, the technology industry, as I said, they're making some small investments in biotech, for example, alternative energy industries. We should be the creative capital.
Green tech.
Green tech.
That's it.
Absolutely. I mean, if the new phrase green collar jobs, that's an area that New York City should look into, should be making investments in. As we continue to talk in New York City about trying to be the greenest city in the world, we import all the materials from outside of the city. It's an opportunity for New York City to start to develop some of that. And also, one of the other areas that we need to take a look at, and it may not be a specific area, but it is an understanding that you're looking at more and more and more individuals who are self-employed across a number of sectors. You know, at one point back in the office, we're sitting there when the economy was better. Unemployment was down, but the number of payroll jobs was still about the same. And we're sitting there trying to figure out where's the growth in. Those who are self-employed, they're up to about 17% of the workforce.
Wow.
And that's New York has been such a draw for people from all over the world because it's the center.
City.
It's a creative, intellectual, human capital-based city. And I think that if we lose that, we really will go down.
Even though one thing, and as part of this discussion, we're not, Wall Street, just like they've bottomed before and they've had problems, they continue to reinvent themselves in different ways. They will reinvent themselves again in another way and start to make money. It may not be as much as they were making. It will be a substantial amount of money, and they will still continue to be a big part of New York City's economy.
Over what time period? Remember, I mean, in the long run, we're all dead here, and maybe we may experience financial death before we experience physical death. How long is this going to be?
I don't think we're dead yet. I think tough times, but not dead.
Okay.
And I think if you look over the next few years, Wall Street will start to come up with new ideas and new directions. They just did. That's what we're seeing is kind of a correction and a collapse of, a bad idea that really it was almost building a house not on, as some would say, on sand, but building a house on air or on smoke. So all of a sudden, it collapsed. They'll find other ways to make money again.
Well, you just saw $700 billion set aside by the government to repurchase these assets and hold auctions. Who do you think's doing that work? That's work for Wall Street in a new format. And look at the bankruptcy lawyers.
They're going to make money. They are going to make money no matter what.
Absolutely.
And it's the $700 billion's coming from home.
The advisors are going to be making money. I mean, there's people who have to do this work now. This is a new industry. There's a new look at bankruptcy lawyers.
You're real. You're making
that's not cynical. That's reality.
Medicine. Let's talk about some specifics. Pension funds. You control what? $105 billion worth. What is it?
105.
Talk about the pension funds, the amount of money, and where we are, let's say, today and where we might be tomorrow and next month. And you can go as far ahead as you want to make it look good.
Tell you what, if you go back and look at 3 consecutive down years in the market. I mean, it is not as if our pension funds haven't been there before. We've gone through ups and downs. The one thing, and the one that I've tried to do along with the trustees of the pension boards is to diversify our portfolio a bit more. More real estate, more private equity, just not stocks and bonds, try and spread things out a little more. We've done some of that. We haven't done, obviously, we continue to, you do it in a phased effort. We've done it over a period of time. We continue to do that. We're not losing as much as we would have lost before, which is a good thing. So even though we still are very dependent on the stock market. I think every public pension fund in the country is. But we've started to bring some things in to balance that out. Are we losing money? Sure we are. Every public pension fund in the world is losing money. It's like your 401k.
Excuse me,
sorry,
remind me.
Not to bring up a bad issue.
You.
But we're all losing money. At the same point, I remember New York City pension funds, they were at $100 billion, probably back in 1999, beginning of 2000. They wound up down at about 75. Back up again to like 110, 111. So we're going to, you'll see ups and downs. At the same point, the market's going to bounce back again, and that's what we're dependent on. The market will start to look at earnings again and not react just to fear and rumor and gee, I wonder what's going to happen in Europe, and all of a sudden the market dies through, 800 points at one point and then bounces back, so everybody feels good about losing 370 points in one day.
Right. It's all relative.
But right now, what you're seeing is, it isn't being done based on earnings, based on projections. It's being based on fear. When that starts to come out of the marketplace, you're going to see things start to stabilize and bounce back.
So in some sense, the fundamentals of the economy are essentially sound?
I'm not. Wait, I am not John McCain. So it's I think that the underlying, some of the lack of transparency in the system to begin with, the underlying, what happened in a lot of these investment banking firms and a lot of the insurance companies and others sitting there holding securities that they have no idea what's there. And then when the dominoes start to fall, when the subprime crisis happens, when other things start to occur, then all of a sudden the dominoes start to cascade. Everything wasn't sound, which is why we're seeing this. I don't think, though, that government and others are going to allow it to bounce back to that place where no one knew what they were holding, where there was less regulation and no transparency. I think you're going to see greater transparency back in. Maybe not more regulation, but definitely greater transparency. You're not going to go back to where you were before. So where things sound, obviously not, because of where we're at right now and what's going on around us. But you're making correction.
Let's talk about other things. Let's talk about taxes, job loss, housing. What are the impacts? I mean, here we are. We're in the city and the metropolitan region. What's going to happen? Budget deficit.
Budget deficit certainly going to increase, and that leads to the obvious question: will they either raise taxes, and on whom? And how many people are going to have to get laid off? The fiscal problem is, well, you could speak to this better than I, but and real estate, it's going to become a buyer's market even more than it already has been. You're losing that whole swath of well-to-do investment bankers who are no longer buying $11 million homes. So the top end of the market, people are going to have to cut their prices. As I say, there's some good news here. You're going to be able to afford apartments pretty soon. You're going to be able to afford an office rent pretty soon.
You can almost afford a tank full of gas, given the contraction.
Not quite.
Okay, no, I said almost. I said almost. Okay. Budget deficit. What is the projected size of the budget deficit right now or recently?
We were looking at a budget deficit for the year that begins July 1st of 2009 of about $2 billion or a little bit more. Is that going to go up? Sure. At the same point, the one thing, New York State and New York City, to be able to draw contrasts.
Go ahead.
New York City, we realized there was a problem. We started to reduce budget or make budget cuts January of last year.
Okay.
2.5% then, which really over a 12-month period of time is 5%. 2.5% then, 5% starting July 1st.
So we've been prudent in some degree.
We've been smart. Also, when times were good, we didn't spend all the money like the state did. So New York City has been smarter. So what we have done is, over a period of time, we started to reduce our budget. And right now, we're about to embark upon another budget cut of about 2.5%. We believe that right now we can get to the next budget year without having to raise taxes.
No budget modification.
No. The only thing is, you're going to see budget mods as far as reduction, but not. And the only area that the mayor is talking about, and some would argue it is a tax increase. I basically look at it as going back to where we were. There was a 7% cut in property taxes. You're not going to be able to do that again. And as a matter of fact, you did make that cut for this fiscal year that began July 1st. January 1st, you may have to go back and move that back up again.
What about the rebates? That's gone too?
No, the rebates are still moving forward right now, even though, before you talk about, it's during flush times we've been giving money back. To homeowners in New York City, the 7% cut, the $400 rebate.
Right.
As you start to move on, before you'd want to look at any other and talk about making change in other places, obviously that would be the next place that you'd look at. You want to exhaust everything before you talk about raising taxes. That just makes no sense.
But the budget deficit now, if it's $2.5 billion, even if it increases 50%, you're talking about a $3.75 billion hole. This seems manageable. I mean, we're talking about this crisis and that we need continued leadership from the same folks because of the direness of the crisis. It doesn't, at least in terms of budget deficit, it doesn't sound that onerous. We've been there many times before, no?
Yes, we have. We've been in tough times before. And the only thing is, there are those who would say, geez, this is the worst situation we've ever been in. The truth is, I thought we were in a much worse situation after September 11th. And at that point, the viability and the future of New York City was at stake. Would people stay here? Would they leave? Would businesses flee New York City? Lower Manhattan? All those questions were on the table. we came back. We came back stronger than ever before. So are these tough times? Sure. New York City almost went bankrupt in the mid-1970s. This isn't as tough as that.
Excuse me, I have a letter firing me from the New York City Board of Ed, laying me off in the first wave of the fiscal crisis. I understand this. So this is certainly not unique, and it's not even close to being as severe as that we've experienced during our short lifetimes.
I'm not going to understate the difficulty of the situation. You know, look, we're looking at budgets right now. I mentioned the permanent job loss. We have yet to see how all of this plays out as far as revenue. It is going to be difficult on New York, but we'll get through this. That's the one thing. It is. I'm not going to minimize and say, oh, geez, it's easy. No, there are going to be. There's a bit of a shift going on here. We're just not sure how many jobs the city is going to wind up losing on Wall Street. However, you go back to look at crash, other financial crashes. Job loss isn't being predicted as big as some of those other crashes on Wall Street, not just across the entire sector, but on Wall Street. That's different and better than before.
One of the fronts, the possible next fronts in this financial crisis is state and local governments. I mean, you've got Schwarzenegger writing to Paulson saying that California and other states might have to go to the feds for short-term financing. Oregon was forced to cancel a $21 million bond initiative for the university. And Tuesday's New York Times reports financial crisis takes a toll on an already squeezed cities. So we're seeing, is the front changing now?
Well, I think that's a symptom of the credit market crisis. I mean, we've sort of moved out of a real estate subprime crisis into, the lack of confidence is now spread to the short-term money markets. And they're no different than anybody else. The states and the cities need to be able to access those markets in order to operate, to make their payroll, and to meet their obligations. That's the same thing that companies are facing with the crisis in the commercial paper market. I think what's significant is that the Fed is now saying, maybe we have to take even more extreme action here and start to make loans directly to state and local governments, directly to companies. That would be really a first. But I think that this is a global credit market crisis, and you have to look for leadership now, not only at the Fed, but also with the European monetary authorities. And that's what the markets, I think, need to see, is that they're going to, we are not going to go down. We are going to see people step up and come up with innovative solutions here. Okay,
you're teaching a course called Covering New York City's Economy and Business.
Great semester for that.
Oh, excuse me, the real world really smiled on Sarah Bartlett. What are you telling your students? In a sense, what are the stories? What are they looking at and looking for, and what should we be looking at and looking for?
Well, needless to say, it's an astonishing time to be, we've sort of ripped up the syllabus many times and brought new material in, and the guests have been phenomenal, including the chief economist of the Comptroller's office. But like any crisis, there are people who win and there are people who lose. And so what we're trying to make sure that they get out there and talk to people who, what is the daily experience of a small business person, of an immigrant entrepreneur in Queens? How does this play out? How does this big macro global economic crisis affect daily lives and the heartbeat of the economy? And so, as I said earlier, I think there's some silver linings here, and I think there's some people who are really going to fall into crisis. And we need to really, as journalists, be mapping those both out.
The bailout, at least a couple of days after the bailout, doesn't seem to have been enough. The banks are still hoarding cash. There seems to be this this conflict between individual rationality, let me sound like a professor, and the social good. It's rational for each of these banks to hold the money back, waiting to see what happens. But if they all hold the money back, it happens. So what happens next?
Well, but what you're seeing is a bailout package passed. The money from that bailout package isn't out there yet. They're not bringing in the bad debt yet. It's not off the books. It's not putting additional...
How long does that take? You're right.
It's got to take at least, it's got to take a few weeks at least to be able to begin to put things in place, just to be able to say,
they're hiring people.
Yes. The questions right now, if you're going to buy bad debt, at what price? Those are some of the questions we've been sitting here asking. I talked to friends who are in the marketplace saying some of the bad debt is being bought between 43 cents and 50 cents on a dollar. It says if you pay more than 50 cents on a dollar, you're overpaying. I agree. Well, how much is the federal government? How much are they going to be buying bad debt at? If it's higher than 50 cents on a dollar, well, now it's a real, not just a bailout. Now it's a gift over and above. There's still so many things that need to be done before you see more stability. And I agree, it's the credit markets right now. I mean, you talked about different places not having access to the bond market. New York City, we were lucky. We went to market last week with a $300 million bond deal, but that's after backing up and saying, okay, New York City's a great credit. Let's try and move forward finally at least on this one bond deal. And we were lucky that we got it done. At the same point, there are municipalities all across the country who are waiting and waiting because there's no access to the credit market right now.
It seems
the best city, the best company in the world, if they can't get access to the credit market,
yes,
they can't function. So it's really, the crisis of confidence has to get resolved in order for normal, healthy companies with good earnings to actually be able to get in the market and function. And that's the critical issue now, is how do we restore confidence? And it's not easy when your presidential candidates are shooting each other over events that occurred 20 years ago that are a complete sideshow.
Yes.
We need to
so
see
you have
some
a
political
failure
leadership.
in the sense of leadership.
Absolutely. You can't put this thing back together again if people don't start to behave like grown-ups.
So Humpty Dumpty stays broken.
Unless people work together to try and put it together, try and glue it back, try and glue Humpty back together again. And right now, you point out, there is no confidence in the White House at this point. I mean, every time the president speaks, no one listens. And the two candidates are, beating each other up on personal issues rather than look at the economy and rather than focus on what's good for America.
Looking at the two candidates very briefly, do either one of them offer any significant, at least, responses to the crisis, let alone answering or addressing it?
Well, I'll take first shot. I'll take first shot. Look, I'm a Democrat. And that aside, I think at the very least that was what Barack Obama has been trying to talk about, the economy and its impact on individuals and the middle class in this country, and some ideas about things that can be done there. Obviously, that isn't working for John McCain. So in the last couple of days, what we are seeing is personal attacks. And now all of a sudden, with a series of debates still to go, at least 2 more debates still to go. Well, the question is, geez, what are they going to say about are they going to say about things about each other as opposed to the economy? And I think that's what Americans want to hear. What about us? That's what we all want to hear these days.
If you were going to predict the next headlines, what might they be?
I would think it would focus on global central bankers coming together and issuing a statement, a joint statement, that they are all going to step in a coordinated way to restore stability in the credit markets.
What do you think?
You know something, I would agree with that. I think that if you look, believe it or not, we have agreement.
Sure.
No, I think that the European Union, if anything, I talked to a couple of friends who are doing, their companies were doing substantial business in Europe. Up until you started to see a couple banks fail, those accounts and others weren't guaranteed. So all of a sudden, you're watching people starting to yank money out of Europe because the money wasn't guaranteed. You're seeing the European Union countries all of a sudden say, wait, we're going to guarantee that bank. We're not going to let you lose money. Because if not, people were about to pull their money out and take it to the United States, where at least there is some insurance and some guarantee. I think you're going to see European bankers come together to try and restore some stability there.
We only have a couple of minutes left, and I can't pass up the opportunity of having you sitting in front of me. What's your reaction to what has been called a blatant power grab by Mike Bloomberg and his fellow plutocrats in the permanent government? I'm not trying to bias your response, but just quoting unnamed sources out there. What's your reaction to all this?
I think first, the biggest thing, and it was, I guess I was disappointed. I always believed Mike's comments before, and when he talked about, changing, trying to change term limits through city council legislation would be, I think the quote was disgraceful. I
think disgusting, but go ahead.
Either, I think it could have been both.
Go ahead.
So, I mean, both, those comments, I believed him. And, all of a sudden for the mayor to wait at the 11th hour and attempt to make change through the city council, I really think it is almost in New York City hijacking democracy and trying to take it away from the people of New York.
But the fiscal situation is being used as a reason, or another word might be a pretext for this power grab. Is at least the mythology out there that Mike Bloomberg is indispensable because of his role as a businessman? Is that a story?
Well, in fact, the Times wrote a piece a couple of days ago about questioning the record that he's been running on the fiscal stewardship. I mean, he has done a lot of really great things. He is a businessman. I think that, you know, New York has really benefited overall from the kind of management and the atmosphere that he's created in the city has been very positive. To say that he's the only person who can do that seems to me a stretch.
It's the same comments. As I said, it seems to be, if you close your eyes, you're back in 2001. And Rudy Giuliani was the one making the argument that New York City couldn't do without him. Well, January 1st of 2002, we brought a whole new group of leaders into office. New York City did well. So it is never about one person. That is the strength, not just of New York City, it's the strength of democracy. That it isn't one person, it's a group of individuals, it's the city. That's how we got through September 11th, that's how we got through the tough times, that's how we're going to get through these times. It isn't going to be because of one person. And are there others who could run the city? There are others who could do well? Absolutely, definitely. So it is a bit of, it's mythology that only one person can run the city.
I'm going to stick with him. Are you still intending?
No, I like that you're handling these questions.
Right. Are you still intending to run for mayor?
It is still my intention to run for mayor, yes.
Are you crazy?
I'm in elective office, possibly.
Wait a second. Here's a guy who's going to spend $150 million, who's got the backing of his fellow billionaires and plutocrats in the media owning these. He's got the business community in his pocket. How do you run against that?
I think it's a question of waiting to see where the people of New York City are, how angry they are at this, end run around democracy. Do they get angry? Are they outraged at the fact that rather than go back and ask them what they thought about term limits, somebody determines what their answer is? I think New Yorkers, the one thing about New Yorkers, we have strong opinions, and when someone ignores our opinion, we're not happy about it. So I'm not sure that New Yorkers are going to go quietly in this situation. I think they're going to get angry.
Yeah, but I mean, is the anger enough to overcome good poll numbers and 150 million?
We'll see.
We certainly will.
We'll see.
Good way to end it. Thank you, sir. Thank you, madam. Nice show.
Thank you.
Thank you, Doug.
Hello, I'm Doug Musio. Let us know what you think about this show. You can reach us at CUNY.TV. When you get there, click on the bar that says Contact Us and send your email. Whatever it is. Thanks, no thanks, obnoxious, do it. Send it.